morning, all. Ira Epstein with your morning flash update for this Tuesday, the 31st of January, 2023, just after 8:30 a.m. And what a cold day. We woke up to 0 in Chicago without wind chills, 10 below in some of the suburbs without wind chills. So it is cold. It's moving east. So get ready. You're going to get this in a couple of days, and it is brutal. All right. I get up early, so I was up today about 3 in the morning watching the markets. Gold was at that point coming apart, down to 1915. It's almost higher on the day. I mean, go figure some of this stuff out. Dollar index had put up more of a rally. It's back to almost unchanged, and a number of the other currencies are starting to get a little bit of life into them, which I find interesting. In the stock market, don't leave to go to the bathroom. You don't know if you're going to be up or down as soon as you come back. It's all over the board today. A little bit of pressure still coming on. Lack of Chinese buying, and be it the copper, the energy markets. People are looking for more out of this, although there's some surprises in China. I write about it. There's some expansion going on. I'll show you what that is in my full research, which brings me into, at any point you want to get a copy of my research studies for free, see them for a little bit if you haven't seen them. Other things that we have, just move your cursor and give a click up here. You'll see an icon appear. Click on it, it'll take you to the free offer area and sign up. Grain markets, they keep trying to break the beans. At least every time they go down, they're finding willing buyers in them. Bonds and notes, you're getting ready now for the FOMC meeting tomorrow. Then the European Central Bank meeting coming up with the Bank of England on Thursday. Then the non-farms payroll on Friday. I mean, there's just so much data coming at you. When we look at today's data, we had an important part to it. We had the employment cost data. You were up 1%. They expected it up 1.1. Nah, missed it. That's good. It's still not crashing, but it's not going up as much as it would. The employment cost index year over year was up 5.1%. ECI wages quarter over quarter up 1%. The prior was up 1.3%. So there's a bit of slack happening here, and the same in the benefits. So the Fed might like that. Companies are not having to add so much cost anymore. It's slipping back a little bit. Red Book sales, well, they were up 5% in the first 4 weeks of January versus January 22, and they were up 4.9% in the week ending January 28th, 1 week versus the year-ago week. Then we get to the Metro 20 home prices, but this is November. Is that reality? I don't think so. This is too old the data. It was up 6.8% from the year ago, and it had fallen at that point 0.8% from the prior month. We get the Chicago PMI data coming out at 8:45. API data coming out after the close today, so we'll have an idea on the energy markets as to where that's all going. So I'll repeat, if you want to get our free offerings, and you should, especially with all these reports coming out, move your clicker up here and give a click. I'm Ira Epstein. You have a great day, and I'll see you at the end of the day with our market wrap-ups. Take care.